And we are here on this healthy, wealthy, and wise Monday to tell if it's time to take some action on our money matters. We have Jack Lansing here with UBS Financial Services. Good morning, and thanks for being here.
Good morning, pleasure.
Yeah, and the markets, getting to talk to about those, are hitting new highs. What's causing those highs?
I think the main thing that we're seeing now is there's a little more balance out there. Certainly, issues with trade tensions seem to be easing a little bit, even updates this morning on that. Second, the Feds have indicated a little bit of patience moving forward. And also, we're done with the last earnings season and everything did fine. So I think the tensions are off. Another point I'd like to make too is markets hit all-time highs more often than people think. I saw some research we did. If you go back to 1945.
Okay, history lesson here.
History lesson. So on a monthly basis, 34% of the time, the market hits an all-time high. So don't be concerned that this is something out of the ordinary that's happening right now. It's actually fairly common when the markets are on a good run.
Okay, people are, I guess some of them out there looking for a spike downwards and maybe fearful, but you said that's not the case necessarily.
Not necessarily, correct.
Okay. What about interest rates? What should we be looking out for there?
Well, the outlook for interest rates, it's almost as challenging as the outlook for the stock market, but also a little homework on my research. They've got a quote of famous economist Yogi Berra when he says, "It's hard to make predictions, especially about the future." But having said that, we see rates lower for longer. There's pressure certainly coming from different levels to have the Feds keep rates lower. The yield curve is looking better, and this is important for consumers because it means you can buy things, you can finance big ticket stuff, houses, cars, appliances, at better rates.
Okay, are there any other issues out there, and how should investors be prepared to deal with them?
Yes, I was surprised this week when our chief investment office, the third point they raised was the flooding in Venice. And that came up in the piece. And I think it's important for viewers to understand Venice isn't sinking. The ocean is rising. There's a tide there that hasn't occurred for, I think it's 50 plus years. Expectation it's going to be $1 billion plus to clean this up. We're going to have to be doing more around the planet to be resilient for the faces of rising oceans and climate change.
Seeing the ripple effect there. And does UBS see any new opportunities since our last meeting?
Yes, one of the things that's happened, we're feeling better about the global economy. So we had pared back a little bit on investing in both international developing markets as well as established markets. Those have gone back up again. So we're thinking, yes, get back overseas a little bit more if you were holding back in that sector.
Okay. The man with money on his mind. Thanks for joining us again, Jack, and good holiday week for you.